All right, good day, friends, and welcome to class one more time. Today, we shall be considering how to prepare nominal ledger and general ledger. Then, if you can go to preparation of trial balance, we will show us so that for people that want to understand what bookkeeping is, this is exactly what we mean by bookkeeping. I hope you're following. All right, so we're using this question on the left hand side of the screen to work tonight to show us how to prepare these nominal ledgers and the general ledger and the preparation of a trial balance. We're using Excel spreadsheet so that it will be clearer to us. All right, so we start. Emmanuel sets up a trading business buying and selling goods. Record the following transaction which occurred during his first month of trading, July 2019, in the relevant ledger account. The first duty is Emmanuel introduced 500,000 into the business by paying money into a business bank account. Now, for every transaction that you want to treat, you must treat them, they must have two legs. That is, that is responding to the golden rule of double entry. That for every credit entry, there must be a corresponding debit entry and vice versa. All right, and each of these lines must go through debit and credit. In other words, each of the instructions given to you whenever you are preparing ledger must have a minimum of two entries in different ledgers. You understand? I will show us how we can do that. Number one, the one we just read now, Emmanuel introduced 500,000 into the business by paying money into a business bank account. We represent that with what? Capital. We represent it with capital. Capital. And that is, capital is giving bank. Is giving it to bank. Bank is collecting the 500,000. All right. Now, we'll now come down and say, okay, bank. All right. So name this as bank. Bank is receiving. Remember, since the transaction was recorded on the credit side of capital, then the corresponding debit entry will be bank, which is, and that will be capital received from, bank received from capital 500,000. All right, and that is all for that line. So you move on to line 2. The business bought a motor van for 60,000 naira. Payment was by check. Now look at, motor van is an asset, so you record it as what? You record it as an asset. You will not record it as purchases, but because it is an asset, you record it as motor van. So we're going to have a motor van ledger, motor van ledger, and we were told that it was through check, that is, bank gave it to motor van. So you write here motor van, and the next thing is how much? 60,000. All right, and let's create more spaces so that this will show. Same thing here. Let's create more spaces here so that it will show. All right. So motor van. So we'll come to motor van now. Since motor van is on the credit side of your ledger of the bank, it has to come to the debit side of the what? Bank. Give it to this person. This one, 60,000. All right, we have answered the second requirement. The third one is the business bought some inventory. Now look at this. This is inventory. Now, for you to record inventory as a ledger, to put it as a ledger title, probably it was bought on credit, or sold on credit. But if it is not bought or sold on credit, what you're supposed to put there is purchases. That is what you're supposed to put. You put purchases, unless the transaction was done on credit. So let's put purchases here. Purchases. All right, let's look at the transaction again. He said the business bought some inventory for 30,000 naira by paying check. You can only pay check through bank. So you come to the credit side of bank and put purchases. We have to put purchases because this is what we buy and sell. How much is it? 30,000. 30,000. I hope you are following. All right, so you come to purchases, debit side, you put bank, and you put the corresponding amount, 30,000. Right. So I hope you're actually getting it. The next instruction says, look at where the instruction is. It says the entire inventory purchased transaction 3 was sold for 50,000 in cash. So that transaction should be recorded as sales. Should be recorded as what? As sales. So create another ledger, copy, paste, then change this to sales. So sales should have should always have a what? A credit balance. So you move to sales. What medium was the sales done? The entire cash. It was done through cash. So you put cash here. Cash, how much? 50,000 naira. 50,000 naira. See, do not be confused by that statement that the entire 30,000 naira was. That is not your business for now. For now, that's not your business. Let's correct this. All right. Sales. So you go to you create another ledger, which is cash. You have to create a ledger for cash because for every debit entry there must be a corresponding credit entry and vice versa. So you put cash here. You put sales here. Put sales here and you put how much? 50,000. I hope you're following. All right, so we are treating it one by each. The next line says number 5. More inventory was purchased for 100,000 naira on credit. More inventory was purchased for 100,000 on credit. What does it mean? That is credit purchases. So you have to come and create what is called trade receivables. Copy trade receivables. Paste. Change this to trade receivables. Trade receivables is giving it out. Is giving it out to purchases. Purchases. How much? 100,000. All right. So you go to purchases. Since you have created the ledger up, go to purchases and do what? And enter trade receivables here. Remember, under trade receivable ledger, it was on credit side. So purchases will take it in as debit side. Trade receivables, which is 100. Is it? How much is it? 100,000. 100,000. All right. Let's create more spaces here so that we can have so that you can show. All right, so we move on now. We move on to, so we'll move on to line what now? More inventory. Okay, we have done number 5. 50%, we're treating number 6 now. 50% of the inventory purchased in transaction 5 was sold for 80,000 naira. 50% was sold for 80,000 naira. All these sales were on credit. Look at, already you have credit purchases, now you have credit sales, and you represent credit sales with what? With trade payables or trade receivables rather. Trade receivables. So okay, sorry, this should be trade payables, not receivables. Payables. This should be payables, while this is receivables. The one for sales is for receivables, while the one for purchases on credit is payables. So please correct that in your notes. All right, so the transaction we're treating is the inventory. 50% of the inventory purchased in transaction 5 was sold for credit. That is credit sales. Is that not so? So sales is giving it to trade receivables. So we'll put sales here. Sales here. 50% was sold for, and it was this, the amount was 80,000. So you go to sales now. Sales, and put trade receivables. Trade receivables. Trade receivables. Put, what's the amount now? 80,000. 80,000. All right. We are done with that. Let's go to purchases. Let's go to purchases to correct that payable. Purchases, trade payables. Okay, I think it's correct. Go back to purchases. This should be payables. Payables. Please correct it in your notes. Payables. All right, that does that. Numbers next. A payment of 30,000 was made to a supplier for some of the purchases. A payment of 30,000 was made to a supplier. All right, that is, we made some purchases on credit. Now we are paying the supplier back. What are the two transactions that are involved here? Was it through cash? Okay, it wasn't mentioned whether it was through cash, but remember we bought this thing through, we received this transaction, these purchases through what? Through bank. All right, so we should look at bank also. A payment of 30,000 naira was made to a supplier for some of the purchases. So we'll look at bank. Bank should pay this out. That's trade what? Payables. Trade payables is receiving how much? 30,000. 30, 1, 2, 3. All right, 30,000. Then you come to trade payables. Friends, are you following? Okay, this is trade payables. We'll reduce our trade payables by telling ourselves that bank has paid this how much? 30,000. 30, 1, 2, 3. Okay, so by this, the trade payables are reduced. All right, the next line is what? Number 8. A payment of 40,000 naira was received. A payment of 40,000 naira was received from a customer for some of the sales on credit. Just like the way we treated the trade payables, now we're going to treat the trade receivables like that. Where is our trade receivables? So trade receivables will be reduced by this amount. A payment of 40,000 was received from a customer for sales on credit. Okay, you put it, let's put it as bank. The sales, was it bank? Okay, but it wasn't stated as bank, so let's put cash. Okay, how much is it? 40,000. 40, 1, 2, 3. 40,000. I hope you are following. So cash will increase. Our asset cash will increase because the transaction will be reduction in assets and increase in assets. Those are the two transactions that are involved here. So we have trade payables, trade receivables rather, receivables. How much? Number 8, 40,000. 40,000. All right. I hope you are following. We're in number 9 now. Number 9. Emmanuel due 10,000 naira from the bank account for his personal use. Now the transactions that are involved here is called drawings. So drawings and capital will be affected. Drawings and capital would be affected. So we are having two tables. We're having no additional table. We put this as drawings. Drawings. And let's erase all this. Drawings is receiving, capital is giving. So Emmanuel drew 10,000 from the bank. So like I said, that's from the bank, right? So bank is the one giving. Bank is giving out to you drawings, because this drawings is representing the owner of the business. That's 10,000. All right, so go to bank so that you don't forget. Go to bank and reduce your assets at the bank. This is bank. So you give it to drawings. Drawings is how much? 10,000 naira. All right, I think that is that for number 9. However, please remember, friends, that drawings is that part of the owner's capital account that must reduce the owner's fund, owner's investment in the business. So it's supposed to reduce the capital by the amount of drawings the person took from the business. All right, please, let's just bear that in mind. All right, number 10. Emmanuel paid 2,000 naira for diesel for the motor van using a business check. Diesel for the motor van. You understand it? You can put this as, since it's consumable, you can put it as motor expenses. Motor van expenses is different from motor van. So we are creating another ledger. Motor van expenses. That's what we're creating now. Expense. Motor van expense. Then you come here. Because it's an expense, it must have a debit balance. So motor van expense is receiving from bank. She's receiving from bank how much? 2,000 naira. All right, and you go to bank to reduce the amount in bank by 2,000 naira. Motor van expense. This one is different, it's an expenses. So you put it as 2,000. That solves that. The next thing we're going to look at is the business paid 15,000 naira by check for the premium on an insurance policy. So you look at it is also an administrative expenses, so you create it as an expense. So we're looking at, this is insurance expense. Insurance expense is receiving money paid 15,000 by check from bank. Now 15,000 naira, 15, 1, 2, 3. Okay, so bank is supposed to pay out. Bank is paying out this amount, 15,000 naira. That's insurance expense or premium, whatever you want to call it. I'll put expense here, 15,000 naira, 15 to 3. All right, that solves that. Paid 2,000 naira for diesel, we have done that. The business paid 15, we have done that. The business received a bank loan of 100,000 naira repayable in 2 years. Now look at it. Your concern for you to create a ledger, your concern is basically the capital part of it. The capital is affected, that is, the capital of the business has increased and it is through bank. So you go back to your capital up and you put loan. Who is giving us the loan? Receive a bank loan. Put bank loan 100,000. All right, come to bank and put loan as. All right, I think that solves the 12 transaction. That solves the 12 transaction. Requirement A says post all transactions to ledger account. That is what we have done now, but we are not through with it. But let's go on with the question. Close off each account and extract a trial balance. Okay, so that is what we're going to be doing now. We'll close off each. I will show you how to close off each account. Friends, remember that the right hand side of your T shape is your credit side, while the left hand side is your debit side. And the rule says debit the receiver and credit the giver. So I'm going to be showing us how to close off, like they say we should do. Close off each of the ledger, close off each account, and we should extract a trial balance. So we will close this off now. You underline. Okay, and you underline what is the total. The total is how much? 600. 600. So you bring the same 600 here and you close it off. You come here and write balance carried down. Balance carried down is your 600. Then you have it as put this, let's put a tick box to signify, or let's put a double line. Put a double line down. All right, same thing. All right. So since your balance carried down is on the left hand side here, is on the debit side there, then you will bring it down to this place as balance brought forward, balance BD. It will now be what? 600,000. 6. Okay, with this you've been able to close off this ledger account. Let's go on to the all right. So that we'll have enough space to play around. All right, the balance here will be what? Balance here, use your calculator to sum it up. The balance here will be, here's my calculator. All right, we have 60. We have 60 plus 30 plus 30 plus 10 plus 2, then plus 15. What's the total? 147. So our total here is 147. 147. This is how to close off each of the ledger. All right, so you see this 147, we'll bring it to this place and put our normal single line up, double line down. Do the same thing here. Okay, but if you check the two sides does not have they do not have the same balance, so you have to have balance CD here. Balance CD. What is the difference between this and the other side? Okay, this is not correct. Let's remove this from here. We are going to move this down. Apologies, this is 600, 1, 2, 3, and then it should be moved down because of the this. All right, so same thing is applicable to this. Enter. So you delete this. All right, so this will give you the difference between 147 and 600 is what? It should be 147 minus 600. Let's look at it. Minus 600 should give you how much? 453. So you have your balance here. 453. 453,000. 1, 2, 3. And this is where you have your balance CD. Remember, it is the side that has less amount that you put balance CD, so that the opening balances can be on the side that has higher amount. You understand it? So we are moving the balance. This will now be balance what? BD. Put the same amount that is here. 453. 1, 2, 3. Put it there. You have closed off this. Move to the next one, which is this one does not have any transaction, so to say. It does not have any transaction, so to say. So you just bring your balance CD here. Then you put this as double line, put this as double line. All right. Then you now bring your balance BD here. Balance BD. Balance BD will now have the same amount. All right. The next thing is okay, I put together. All right. The next one is purchases. So purchases does not have anything on this side. Balance CD, that's balance carry down. Pull the total from here, which is what? 130. 12303. Pull it down to this. So you now come here, write the total here. 130123. That's the total. Then you put the same amount here. Then you come here and put your underline. All right, so your purchases has a balance CD here, so you put your balance BD down here. Balance BD of how much? 130. 123. All right, so you have to put your double underline here to signify balance in both sides. All right, you go down to sales. Sales has a total of how much? 50 plus 80 gives you 130. 130. Right? Write the same figure here. Then the same figure here. This is your balance CD. So you move your balance CD to this side. You have balance BD. Balance BD. Put your double line under. Put your double line under. Right, so that gives you that on sales. The next thing is your cash. Cash has a total of how much? 90,000. 90. So you bring your 90,000 here. Bring it in. This one here is your balance CD, while the one you're going to be having here, 90, is your balance BD. Put your double lines here, double lines here, and that solves that. The next one is your trade payables. Trade payables has this amount. Okay, that's 100,000. And the difference between 100 and 30 is how much? 70, 1, 2, 3. Right, so you have your 100 here. So you bring your 70 here. 70. Okay, now name this as balance. CD. While this is named as balance PD. Right. Excuse me. Put your double line. Put your double line here, and that solves that. Okay. The next one is this. Which one is higher? This is higher, so you have your balance CD here. What's the balance? That's 40,000. 1, 2, 3. Then you have 80 here. Same thing should come here. While you have 40 here. That's your balance BD. Alright, so let's underline this and underline this, double underline to show balance. Then that solves that on trade receivables. Now trade drawings is having the same amount. It's having the same amount, so you just put your balance CD here. Then you have your balance BD here, 10 balance BD here. So you put your double line here, double line, put your double line. Alright. Next thing is do your motor van expenses, which is one of the items under admin expenses. You have balance CD. Balance CD is 2,000. Then you have your sorry 2,000. Have balance CD PD rather PD here. So in this wise, just put your double line here also. The next one is what? Insurance balance CD. So you have your double line, underline it since there is nothing up, underline it. Bring your balance BD 15. Alright, the next thing you're looking at is what? What's the next thing on that table? Okay, that seems to be the end of closing off of each account. So we just finished answering this now, this particular line. So we should close off each account and extract a trial balance. So the next assignment for us to do is to do what? Extract a trial balance. All right. If you are to extract a trial balance, then let's bring it here like this. All right, so we're going to create a trial balance now for all. Now, trial balance is created by having two sides, still the two sides, put credit and debit. So let's put debit here and debit, and let's have credit here. Okay, and let's put trial balance. Emmanuel, put up, right? Emmanuel, and put Manuel trial balance. Right, Manuel trial balance. This is description. Or we call it ledger. So we do this like this, makes centralize it. So this is how you prepare your ledger account, or your trial balance rather. You now begin by picking the name of the account. The first one is capital ledger, capital. So you come to where is the balance? Where does the balance fall? Is it on the credit side or the debit side? So this one falls on the credit side. We put it under credit side, which is 600. Right. All right. The next one is what now? Bank. So bank has a debit balance. Bank has a debit balance. So you write bank has a debit balance of how much? 453,000. So that brings us to this one. The next thing you're going to look at is what? Motor van, which is 60,000 on the debit side. Motor van, okay, 60,000. Right, the next thing is what? Purchases as 130 on the debit side. Purchases 130 on the debit side. All right, the next one is sales, and it has 130 on the credit side. Sales 130 on the credit side. So this is sales. No, it's not sales. All right, the next one is cash, which has 90,000 on the debit side. Cash 90,000, 90, 1, 2, 3. Cash, debit side. All right, the next thing is trade payables. which has 70,000 on the credit side. 70,000 on the credit side. Trade payables. Right? The next one is what? Trade receivables, which has 40,000 on the debit side. Trade receivables, 40,000, 43. Trade receivable. Right. One is next. We have drawings, and drawings has 10,000 naira on 10,000 naira on the debit side. Drawings. Right. The next one is motor van expenses, 2,000 on debit side. Motor van expenses, 2,000 on debit side. Motor van expense. All right. What's next? The last but not the least is insurance, and it has 15,000 on the debit side. Insurance has Insurance has 15. Okay. All right. So at this point, we have finished preparing our trial balance. So the next thing is for us to check if both sides are equal truly, because a trial balance, each side of the trial balance must be equal. Both sides must be equal. Both sides. Okay, both sides must be equal. Let's see if I can do a shortcut. We have 800,000. Let's check if the same thing is applicable here. Understand? Alright, so as you can see, both sides of our trial balance are equal. And that is the end of that of the solution they ask us to do, which is this one. We have answered question 2 here. So prepare a statement of profit or loss and a statement of financial position. Assume that Emmanuel has closing inventory of 50,000 naira. All right, so profit or loss and statement of financial position. Profit or loss, statement of financial position. All right, so we would have to have a full screen. Then we would move to this side. This side, because we only need the trial balance to prepare those two that they ask us to do, and prepare them like this. Write Emmanuel. Emmanuel Samaran is not trial balance. Put so this is the title for the profit or loss account. So the first thing you write here is your revenue, or you put sales. Sales, which represents your revenue. Revenue. It should be on your credit. Sorry, on this side. This time around there is no credit side. So what is under sales here is 130. 130. 0, 1, 2, 3. So that gives you a figure here. All right. The next thing you're going to be doing after you have written your sales is your cost of sales. And your cost of sales involved opening stock, purchases, and closing stock. Let me quickly give us a hint on how to write your cost of sales. Just write it here. Let me write it here. All right, opening stock plus purchases. Opening stock plus purchases will give you an amount here. You now less your less closing stock. So you now underline it, and this is the process for having cost of sales. Please, let's bear that in mind. So now in this our example, now in this our workings, opening stock is not available, but we have purchases. So for us to have our cost of sales now, and since we do not have closing, we do not have opening stock. So since we did not have opening stock, we'll just work it like this. We'll say purchases now becomes the total of what is there here. So you less your closing stock. Less your closing stock. So since it will give you cost of sales, you come back here. Opening stock, what is our purchases in this record? Purchases is 130. So you put your workings there. Workings. Number 1, purchases. Purchases, how much? 130. Is that correct? Yes. You now less closing stock. Less closing stock. Closing stock is how much? 50,000 as given to us in this example. Let's look at the figure in the example again. So we should assume that Emmanuel has closing inventory of 50,000. So we'll come here and put 50. 1, 2, 3. So you less this from 130, it gives you how much? 80,000. So your cost of sales becomes how much? 80,000. So come to this place and put less cost of sales. 80,000. 80. So since you are removing it, you should have a total. You should underline this. It will now be what? 50. 50. 1, 2, 3. 50,000. All right. If you less your cost of sales from the sales, it gives you what is referred to as what? Gross profit. Gross profit. Now, after removing your gross profit, you now less other expenses. Less other expenses. let's say admin expenses, administrative expense. Expenses. Admin expenses include what? You have your motor van expenses. Motor van expense. That's your admin. How much is it? 2,000 naira. 223. You put down that one here. Now put insurance. Insurance. The expenses on insurance was how much? 15,000. So you have this. Now add this together to give you an amount here, because there is no other profit or loss item in this trial balance apart from the ones we have extracted. So the total of this is what? 17,000. All right, are you following? So 17,000, that's the total of our expenses. So we will take this away from the gross profit. It gives you your net profit of about 33,000. All right, are we together? All right, and this 33,000 is supposed to be a double underline, because that is the net profit for the period. Net profit for the period. All right, so that is that on that. What else are we missing? Nothing. So from here we'll move to an extract on what's it called now. So we should prepare our. So from this statement, it says prepare a statement of profit or loss, which is what we have done, and a statement of financial position. Assume that Emmanuel has a closing. Okay, so we have seen that. So statement of financial position is what we want to produce now. Let's go on. Let's go there. So this is how you prepare your table, your title for statement of profit. Financial position, which is otherwise called your balance sheet in those days. Now, but I need to call your attention to the fact that when you are preparing your profit or loss account, you use for the period ended, at times for the year ended if it is a year. But in statement of financial position, you use as at the period. You stipulate the period. Please bear it in mind. So going forward, the next thing you're going to write is your non-current asset. Your non-current asset is comprised of items like your motor van, like you stated here. So your motor van is how much? Motor van is how much? 60,000. 1, 2, 3. 60,000. Then, okay, what else do we need to bring under non-current assets here? Van expenses? No, nothing. So your non-current asset is done for this. So you move to current asset. And your current asset include number 1, bank, which is how much? How much is bank? 453, Abi. 453. Yes, 453. 1, 2, 3. All right. The next item for non-current asset is what? Cash. What is the balance on cash? 90,000. 1, 2, 3. All right, let's move on. What items do you? What are the things under non-current assets again? Again, we have trade receivables. Trade receivables. Right? Trade receivables. We have that as how much? 40,000. 40, 1, 2, 3. All right. I hope you're following. All right. Please, if you have any question, do not hesitate to let us know. Please just keep asking me questions on the chat box below, and I will be answering you. Right? What other item do we have under current assets here? Let's bold this to signify it as the title. Right? So we're going to, since that's all, we'll move on to having the total. What's the total of this here? So if you're having a total, you underline this, then you will now bring it here. Total is 453. Where is my calculator? 453 90 minus 40 583. So it's giving me 583. 583. Please confirm it through your calculator, please. 583. Okay. Excuse me. So you underline this. Why are you underlining it? Because you should have a total that is called total assets. You should have a total that is called total assets. So the addition, which will give you the addition of current assets and non-current assets. So this is what? 643. Is that correct? 643. 1, 2, 3. Right. So this is total assets. So you underline it. In fact, this you should have a double underline. You should have a double underline to it. Yes, because it signifies the end of the first segment. All right. So the next one is what? The next one is your either non-current liabilities, if you have any. But from our trial balance, I'm not seeing any. I'll just write it so that you know that it is there. Non-current liabilities. Non-current liabilities, no one is there, so you move on to current liabilities. Current liabilities. So under current liabilities, we have items like trade payables. We have items like trade payables, which is 70,000 naira. Trade payables, which is 70,000 naira. Put it here. Okay. Then what other items do we have here? Okay. The next thing, since we don't have any other item here, the next thing is your equity. Equity, which is the section for the capital. You understand it? Capital of the entity. Right, capital of the entity, which is comprised of number one, capital. Remember, we have capital as an item up, which is how much? 600, I suppose. Oh no, there is a non-current liability. There is a non-current liability, which is your the loan you collected from the bank. The loan you collected from the bank could be a non-current liability and it could be a current liability. So let's put it under current liability, since we were not told how much is that loan. The loan from the bank is how much? I think it's 100,000. Bank loan is 100,000. So let's put it there. 100,000. 100,000. Where is it? Bank loan. Bank loan. 100. We decide to put it under current liabilities. So you have your here, maybe down here. Your capital is how much? Capital is how much? Capital is 600. But the capital 600. Okay. So let's put this as so that it can show thousands. All right. So our please, friends, let's adjust our capital to be 500 because we are supposed to have a bank loan which is 100,000 and it has to be separated in the ledger account. I've separated that in the other accounts now. All right, the next thing here is what is going to be drawings, and drawings is going to give you minus 10,000. Why do we have to minus? Because drawing is supposed to, like I said earlier, reduce the value of the owner's capital. All right, I hope that's clear. All right, the next thing you're going to put here is what? The net profit. The net profit you made from your trading profit or loss account, which is how much? I think it should be 33,000. Right, so 33,000. Do we have something else? I think we should have something. Okay, that should be all. That should be all. So you find a way to sum this, and friends, I think as you can see, our account is balanced. Give this a double line like you did here. So both sides has to be equal. The one on the asset side must be equal to the liability and equity side, which is 693. All right, I appreciate you, friends, and that marks the end of our class today. But please, if you have any concern, let us know. If you have any question, please just talk to me, and I will quickly attend to them speedily. All right, but before we go now, please let's subscribe, let's share, let's like our pages. We created an additional ledger here, bank loan. Please take note of it, 100,000, which has reduced our capital to be what? 500,000. It has been adjusted here also on the trial balance, and we move the same thing here to this point. Move it here. That's the capital aspect, which is 500. Then this is the bank loan, 600. All right, I appreciate you, and I will see you in my next class. Thank you very much for your attention. Thank you. Please remember to share and remember to send your questions to us, please, and we appreciate. We would like to answer them speedily. Thank you so much.